Hello, and welcome to another update on Doge. Well, Doge continues to consolidate here between micro support and micro resistance. Maybe in the last videos you also watched the last videos, and then you know that the Fibonacci support zone that we've been tracking now, you'd say for the last couple of days, is between 20 cents and 21.7 cents. This is sort of standard Fibonacci support at the moment, yeah. And that level obviously helps us to determine whether this pullback is indeed, let's say, a correction, right? So whether we're really in a corrective pullback, as long as we're holding above 20 cents, the focus overall can still be on higher prices. That's very important to understand. Below 20 cents, I have to say, it's not going to look good. Maybe then this wave 2 could still be unfolding, but I got to say this move up looks a bit like 5 waves. So I'm leaning towards higher prices. Yeah, I really am. But obviously the condition is that we are holding above 20 cents. That's the condition. Now, there is a resistance area here between 23.7 cents and 24.8 cents, which the price is holding below. So basically, we seem to be caught in the complexities of a B wave correction, maybe even wave B of B, which is even messier. Important is, I think, to understand that once this B wave is over, we should see a break above 24.8 cents as an early indication that this, pullback, this correction is over. And then what we want to see is eventually a test of the 28.7 cent level, this previous swing high there from the 21st of July, and the break above. And then the focus will shift towards 38 cents plus. This would be the next larger Fibonacci cluster above. For now, here you can see it. The market seems to be caught in the complexities of a B wave. I mean, the idea is we have 5 waves, 1, 2, 3, 4, 5. So overall looking for higher. This move down looks indeed like 5 waves. So like it could just be an A wave of the B wave. This, I mean, it can be all of the B wave correction, but it just doesn't look like it if we just look at the nanostructures, because such a B wave pullback, well, it's a 3-wave move. It should not just be a 5-wave move. So I have to assume that this is indeed the A wave of a larger correction. Yeah. And if it's just the A wave, then we're currently dealing likely with a B wave corrective bounce. That is, a corrective bounce, which can be characterized by overlapping and messy price action. So what we see here at the moment is completely normal. There's nothing unusual about it. And then once this B wave has topped, the C wave to the downside should follow and send us maybe to the 61.8 fib or the 78.6 fib. Ideally, we get a B wave that is high, maybe even overshoots the previous high. So that would be even better, because the higher this B wave goes, the stronger the market. If the B wave is weak, then it will be challenging possibly for the price to hold above Fibonacci support. So I think parameters are clear. I would say there's a good chance that we spend for the next few days actually in this corrective range. I love to see these pullbacks as ranges. That helps traders to approach them differently, because we have very clearly defined lower range boundaries. Yeah, here 20 cents, and upper range boundaries. You could see the resistance area of the last high, and everything in between here is literally just noise. A lot of people try to predict every move. I don't. You can't in a correction, but we can still track the roadmap, because it helps us to get a good understanding what's happening there, in terms of likely pathways, the most likely pathways. So yeah, that's the update on Doge. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, feel free to join us on X for additional updates, charts, video updates, and much more. Feel free to check it out. The link is in the video description and in the comment section. Thanks so much. Bye-bye.